I didn't notice this right away, but this BPI uitf that is also monitoring the global markets has quietly surpassed the performance of the S&P 500 or the BPI US Equity Index Feeder Fund. Now, we've actually talked about this in the past in one of my first finance videos during the pandemic when this channel was just getting started. I talked about the BPI European Equity Feeder Fund. Granted, it's not as sexy as the S&P 500, it doesn't have the same appeal, and quite frankly, I've invested in it as just sort of a means to hedge while my main strategy is investing in the US markets. Investing in the European markets is a way to diversify. I've been invested in this fund for over 8 years now, and again, while it was only a hedge and only a smaller portion of my portfolio, I'm seeing now that it actually has great returns over a long-term period. What's going on with the BPI European Equity Feeder Fund and how much have I gained from this investment? Stick around and let's find out. Let's go. But before anything, if you are new to this channel, hi, I'm Mark. It's nice to meet you. In this channel, I talk a little bit about lifestyle, but I mostly talk about business and investments. So yes, a lot of you have probably come across this channel, because of one of my S&P 500 videos. I continue to invest in the S&P 500 aggressively. Why the S&P 500? Well, looking back in the last few decades, despite some volatility and maybe some bad years, if you've invested in the S&P 500 regularly, it's just a no-brainer way to have your money appreciate. In fact, I've compared this to even investing in real estate here in the Philippines. But anyway, enough of the S&P 500. In today's video, I want to put the focus on the BPI European Equity Feeder Fund. I honestly haven't invested as much in this fund, but seeing its returns, I'm kind of regretting it now. I wish I'd put in more money, but maybe that's a strategy that we should look into in the future. So let's go through the basics first. To invest in this fund, it would be through a dollar denomination. So you would have to open a US dollar savings account with BPI. And when I invested in this 8 years ago in 2017, the minimum amount to start investing in this UITF was at $1,000. In the last 2 years, BPI has actually lowered this. So now you can invest in this for as little as just $100. And when you have to top up, you want to have subsequent investments in this fund, you can invest for as little as a few cents, or maybe let's just peg it at $1. So it's quite easy to get started in this fund, especially if you already have a BPI savings account in US dollar denomination. Perhaps you have also previously invested in the BPI US Equity Feeder Fund. This UITF has the MSCI Europe Index as its target fund. So that's a Morgan Stanley Capital European Index. Obviously, it's a fund that is monitoring the European markets. So while the S&P 500 would be tracking the top 500 corporations in the US, this fund is looking at the top companies in Europe that is being monitored by the MSCI European Index. In specific order, in terms of the countries that's invested in, the number 1 here would be the United Kingdom, number 2 would be Germany, 3rd would be France, 4th would be Ireland, and the 5th would be Switzerland. So while the S&P 500 is invested in probably more known commercial brands to us, Google, Microsoft, Facebook, the companies that are part of the MSCI European Index are actually perhaps more industrial, a little less commercial. So let me just go through some of these companies. The first would be British American Tobacco. There is also the AIB Group, which is in banking. There's Haleon PLC, which is a spin-off of GlaxoSmithKline or GSK. So they are in the pharmaceutical space. So there's a bunch of these, I guess, old world institutions that are not as well known as their American counterparts. But anyway, this is Europe. That's how things are done. They are focused more on some industrial and more age-old industries, really established companies. So that's just a contrast preview of how this European index actually contrasts to its American counterparts. So that's a brief background of this fund. Let's now move on to the numbers, the more exciting part of this video, where we get to see how the BPI European Equity Feeder Fund is performing against the BPI US Equity Feeder Fund. Based on the official report of BPI as of May this year, 2025, let's go through the cumulative performance of both these funds in the last 6 months, past 1 year, and past 3 years. So in the last 6 months, the BPI US Equity Feeder Fund has actually a loss of -2%. The loss here is mostly driven by the new trade policies that President Trump is imposing. We all know that we experienced a very scary dip, a downtrend in the market that appeared to have set us back a good 6 to 8 months when it happened. Thankfully enough, the market has recovered. As of the time of this May 2025 report, the loss of the S&P 500 and the BPI US Equity Feeder Fund is only at negative 2.33%. Let's compare this to the BPI European Equity Feeder Fund. For the BPI European Equity Feeder Fund, in the last 6 months, its gains are actually at a solid 29%. So that is a big contrast of how it's performing versus the US. It's showing some stability despite the US being a huge trade partner, obviously, of the world and of Europe. This UITF, focused mainly on Europe, is showing the contrast of the US at a negative 2%, while this fund based on Europe is at a gain of 29%. Let's now move on to the performance of the last 1 year. Sticking to the BPI European Equity Feeder Fund, it has gains of 27% in the last 1 year. So I guess looking at it as a whole, 29% return in the last 6 months and 27% in the last year. It's also experienced some setbacks. The BPI US Equity Index Feeder Fund has returns of a little over 11%. So this time, the European index is at 27% 1 year return and the US is at 11%. Let's now move on to the past 3-year period. The BPI US Equity Index Feeder Fund has returns of over 42%. So not bad at all. This is exactly why we continue investing in the S&P 500, why we are big believers. But when we compare this to the BPI European Equity Feeder Fund, its returns in the last 3 years is over 68%. So that is a huge contrast. That's 68% for Europe in the last 3 years, while it's only 42% for the US. So while my impression of this fund was mostly as a second tier before, something that I was investing in, again, just to hedge, just to diversify, these results are actually showing that the BPI European Equity Feeder Fund is actually performing even better than its US counterpart. And again, regrettably, I hope that I actually invested in this more. Being invested in this fund in the last 8 years, it was actually very slow, I have to admit that. This European Equity Feeder Fund has just been very steady all this time. Nothing to really write home about. In fact, when I first made that video in 2020, its returns were at 34%, while the S&P 500 was already over 50% then. So it hasn't been exciting. I haven't been watching it closely, but this index fund from Europe actually shot up. Maybe tension in the US with its trade partners. I guess Europe has stood out as a beacon, as a safe haven for investments. It still has its industry's age-old policies that are in place that maybe for the good or the bad, it is guiding its companies and infrastructure, so the performance of the companies are less dynamic, less volatile, but dependably delivering results for its shareholders. But anyway, let's move on now to my returns, my personal portfolio. So as of the 11th of July 2025, the data that I'm showing you from the app is actually more updated. So for both, I'm happy to share that I actually have almost the exact same returns at 118%. The BPI US Equity Feeder Fund is just ahead by, I think, 0.6%. But roughly, since they are both under 1%, I would consider their returns equal. The big difference though would be that the BPI European Equity Feeder Fund was actually an investment that I did, again starting in 2017. This fund, to be honest, I didn't too aggressively invest in regularly. So most of my investments actually happened in 2017. So for the most part, what we're looking at with this 118% would be my return over the course of an 8-year period from 2017 to 2025. While the BPI US Equity Feeder Fund, this fund I've actively invested in more frequently, more regularly. When I was investing primarily through BPI, I was investing anywhere from $1 to $3 daily, just so that I could cost average, invest regularly without having to time and think about the market. Starting last year, I actually started investing in the S&P 500 through East West Bank. That one has a higher minimum of $200 each time, but a much lower per annum trust fee versus BPIs. Again, we are digressing, talk about the S&P 500. Let's face it, it will always be the benchmark. But I guess what I wanted to impart to you here today is this very low-key, not so popular and perhaps less sexy uitf from BPI, the BPI European Equity Feeder Fund. It's even outdoing the BPI US Equity Feeder Fund, not just recently, not just in the last 6 months, but actually in the last 3 years already. As I've mentioned before, when we are investing in these companies, especially when we are looking at them abroad, we're not really just investing in the company itself, but we are investing in the infrastructure, the political climate, and the different policies that are governing trade. So now that the US has quite a different stance on its global trade partners, I'm actually exploring what other regions, what other industries might be better to invest in, but definitely, and not just as a hedge, not just to diversify, I'm looking at the BPI European Equity Feeder Fund. So what do you think about this fund? Are you looking to invest in it as well? I am looking to invest more on it. I'll take it more seriously this time. If you like this video, please don't forget to like, comment, and consider subscribing if you haven't already. Thanks again for watching, guys, and happy investing.